If you're looking for a mutual fund to invest in, it can be really hard because there's so many available. I'm going to give you a few tips to make it easier. I'm Anna Hilberry. Don't forget to like and subscribe to my YouTube channel. Let's get started. Step number 1, geographic area. You want to determine which area you want to invest in. Is it Canada, US, North America, international? For our purposes today, I'm going to use the international equity space. Step number 2, mutual fund companies. You want to determine which fund companies are available in the international equity space. So go to a website such as Morningstar.ca. It'll give you a list of all the companies that are available, and then you want to stick to the ones where they have a good reputation, you know they have a lot of money under assets, you can Google it, and have been around for a long time. So for example, Fidelity, Dynamic, National Bank Investments, etc. Step number 3, performance. Once you've determined which fund companies you're going to look at the performance of those fund companies over the last 10 years, 5 years, 3 years in the international equity space. And you're going for ones that are in the top quartile. By quartile, I mean fund companies that are in the top 25% for performance of all fund companies available in that space. Fourth quartile means they've had terrible performance. Third is really not very much better. Second is okay, and first quartile is the best. So it may be that some companies have sunk down into the second quartile. That's okay, but for the most part, you're going for consistency and sticking to the top. So in this space, we noticed that the National Bank Investments International High Conviction Equity Private Portfolio looked pretty good. So for example, if we compare the 3-year annual rate of return for this fund, it was 15.78% annually compared to the EFI index of 6.7% annually over the last 3 years, and the category mean of 7.56%. So it looks pretty good, but let's take a closer look. Step number 4, management expense ratios, or MERs. You want to take a look at the management fees that the fund company is charging. If they're way at the higher end of the spectrum, well, if they have a bad year, those fees are still going to be charged, and it may be okay as long as they consistently have amazing performance. But again, if they have a bad year, it might hurt you. Now, I happen to know that in the international equity space, fees are generally a little bit higher because there's more risk, more research needed, and it's a little bit harder to invest internationally if you're located in Canada or the US. For this particular fund, for the F-class version, it's 0.67%, so that's quite reasonable. Step number 5, mutual fund manager. You want to know who's actually running the money. For this National Bank Investments International High Conviction Equity Portfolio, it's Nadine Rizk with a Z, R-I-Z-K. So what I did was I went online, I looked at any kind of videos or publication that he had, I listened to what he said, and I asked myself if it was logical, did it make sense, and does his general philosophy manage what the mutual fund says that it is going to do? Keeping in mind that sometimes fund managers aren't as polished as other people on TV because their job is to manage the money. And so it's the words that come out of their mouth that is important and not how they look like. Step number 6, regulatory information. Once you've decided that you have a fund that you think is going to be a good fit for you, you want to take a much closer look at it. You're going to read the simplified prospectus and the annual report. The reason those are important is they provide much more detail than is involved in the fund fact sheet. They'll give you a really good idea of how the fund made money, what kind of companies it was invested in, the different risks that are involved, whether it be currency risk, country risk. For example, it'll let you know if they've just maybe had a big win because they bet on a certain sector, or whether they have a really good diversified portfolio. So I encourage you to wade through it. It is a lot of information, but there's so much valuable information that is available there to you that you wouldn't be able to get otherwise. I'm Anna Hilberry. I hope this has been helpful for you. Enjoy your day.